Have you been slaving away your entire life to get that almost perfect 800 plus credit score, but now you have a ton of equity in your home that you want to tap into and you don't want to mess that up? If so, this video is for you. What is up, everybody? Welcome back to the channel. If you didn't already know, my name's Jay Costa. I'm a real estate investor, agent, and builder here in Northern New Jersey. And if you get value out of this video after watching, please smash that like button down below and also consider subscribing because we are building a tight-knit community here of like-minded individuals looking to build wealth in real estate, more specifically using a home equity line of credit. If you don't believe me, check the comment sections down below in some of these videos. We are really growing very quickly here and I appreciate all of the support. And in this video, I'm going to cover how a HELOC can impact your credit score, how the credit bureaus treat your HELOC, as well as some tips and tricks on how to handle your HELOC during the application process, as well as after you obtain the HELOC, trying to utilize it in order to maximize your borrowing power. Let's get to it. So first, let's go over the data that is factored in when figuring out your credit score. First, you have payment history, which accounts for 35% of your credit score. This is exactly what it sounds like. It is basically the history of payments that you made and how many are on time compared to how many are late. Next, you have the amount owed, which accounts for 30% of your credit score. And this is exactly what it sounds like as well. It is the amount owed on your debt in your credit report. So the total amount that you owe, the total debt that you have, and how you pay it is 65% of your credit score right there. You also have the length of credit history, which is the average length of each account, how long it's been open for, which accounts for 15%, how many new credit accounts you have, which accounts for 10%, as well as what types of accounts you have, accounting for another 10%. Now let's go over what a HELOC is in basic terms. A home equity line of credit, or a HELOC for short, is a revolving credit line that you get from a lender based on the equity that you have in your home. So if your house is worth $800,000 and you owe $500,000 on your first mortgage, that leaves you with $300,000 of equity in the home. And a HELOC lender will generally give you access to about 80% of that, leaving you with $240,000 of available equity that you could tap into through a home equity line of credit. But before you gain access to this equity, you need to apply for a HELOC to a HELOC lender. And this is where your credit score will first be impacted in the process. You see, when you apply to a lender for a HELOC, they will have a hard pull, a hard inquiry on your credit. This is in order for them to see what your credit score is and see your debt to income and see how good or not so good you are at paying off your debts. This hard inquiry will have an immediate impact on your credit score, but it won't be that much. It's usually only about a 10 or 15 point hit. And it only lasts for a few months. And honestly, after 2 years, it's completely removed off of your credit history. Many of you have asked me in the comment section whether you can go and shop while you're shopping around for a HELOC lender, have a bunch of hard pulls by these lenders, and it only account for one hard inquiry like it is on a regular mortgage. And as far as I can see, in my experience, the answer is no. So with that being said, while you're shopping around to different HELOC lenders, before having them do a hard pull on your credit, just be honest and upfront with them, saying that you're shopping around for the best rate and terms, and you don't want a hard pull until you decide on which exact lender to go with. Now, hard inquiries are part of that 10% of your credit score that is the new credit segment, and it's only 10%. So I wouldn't be overly concerned because it doesn't have a huge impact on your credit score as it is, and it's only temporary. I wouldn't go too crazy though, because the more hard inquiries that you have means more of a red flag to any potential lenders, both now and in the future, until they come off completely in 2 years. So once you pick a lender, you have that hard inquiry on your credit report, and you have obtained a home equity line of credit. And once you have that account open, it will affect your credit score in a couple of different ways, even before you take any money out of it at all. First, a home equity line of credit comes up on your credit report as basically like a home equity loan with a term of 0 months. At least that's what mine shows. It will show the highest available balance, the total amount that's available to you, as well as the current reported balance, which would be $0 if you haven't used it yet. When your HELOC is reported onto your credit report, it comes up as obviously a new account. And just like a new credit card or a new mortgage, this will affect your credit score in regards to that average length of credit history that we talked about that accounts for 15% of your credit score. But once again, just like the hard inquiry, this is only temporary, and as the HELOC account ages on your credit report, the impact of it will be minimized. Now let's get into how your HELOC affects and impacts your credit score after you start using it and utilizing it, because that's what we all want to do, right? I mean, there's no reason to have a HELOC unless you plan on using it on something, and hopefully that something is something that builds wealth. So when you take money out of your HELOC, a reported balance shows up on your credit, and it will also show the minimum interest-only payment that's required of that HELOC to serve that balance. This will, of course, affect your debt-to-income or DTI ratio, and the DTI is one of the biggest factors when applying for any new loans in the future. So keep that in mind. If you plan on applying for a mortgage in the future or a car payment or whatever, that debt will account in your DTI ratio and affect some things with future loan products. Let's use my HELOC as an example. My total balance, available balance for my HELOC is $172,400. Now, I originally obtained this HELOC at the end of 2021, and my credit was barely affected at all until I started utilizing it. And the first time I started heavily utilizing my HELOC was in January of this year in order to obtain a new construction duplex project. I made a video about this project in the past. I'll put a link in the description box down below, as well as up in the corner here. So if you want to learn more about that, definitely check it out. And as you can see here in my credit score history on Credit Karma, my credit score in January of this year was 803. And then once I utilized the HELOC and I maxed this thing out, I used all of the 172,400. Once I utilized it and that got reported, my credit score dropped to 753. And then the score pretty much stayed put until I started paying off or paying down the HELOC balance. So with a HELOC being completely utilized with a balance of $172,400, it basically dropped my credit score by about 50 points. Of course, everyone's credit is different, and I'm sure there's some factors in my credit history that are either helping me or hurting me, but hopefully this gives you a good real-life example of what utilizing a HELOC will do to your credit score. And as of now, my credit report is showing that I still owe over $118,000 on this HELOC. And it's actually lower than that. I think just under 100,000, maybe 98,000 and change, but it does take a month or two to be fully reported to the credit bureaus and be updated in your credit report. So keep that in mind as well. I also made a video recently about why I decided to start paying down and paying off that HELOC balance. If you want to learn more, I'll put a link in the description box down below, as well as up in the corner here. And with that total reported balance of $118,277, it's showing a minimum payment for me of $1,280. So as far as any lenders or anything are concerned, I am fully responsible for that $1,280 monthly payment, just like it would be a car payment or anything like that. So of course, as I stated before, this will hurt your DTI, your debt to income ratio, but it will help you as well, because the more payments that you make on time for this, the better payment history that you have. You see, all of these minimum payments for your HELOC, the interest only payments, will be reported as on-time payments. And as long as you make them all on time, your credit history and credit score will go up. As we said previously in the video, payment history is the biggest factor in your credit score, accounting for 35% of it. Now, in previous HELOC videos, I tend to give off the impression that a HELOC is basically like a credit card that's tied to your home equity. But as far as your credit score goes in your credit report, it's actually not treated like a credit card at all. It's actually treated more like a car loan or a home equity loan or a personal loan than anything else. This means that the debt of a HELOC is not treated as the same debt as like a credit card debt. And even though it's used to determine your DTI ratio, your debt to income ratio, it is not factored into your credit utilization rate. And this goes both ways. So if you have a HELOC of $200,000 and you're using none of it, that doesn't help your credit utilization rate, and vice versa, where if you're using all of that $200,000, it doesn't hurt your credit utilization rate either. At the end of the day, as long as you make your HELOC payments on time, you have very little to worry about in regards to your HELOC's impact on your credit score. The initial hard inquiry is minor and very temporary. And yes, of course, your score will go down once you start utilizing that HELOC money, but so what? If you've been following our tips in these HELOC videos that we've put up in the past, you'll know how to use a HELOC safely and effectively. And if you're using it safely safely and effectively to invest in real estate, a temporary 50-point drop on your credit is not going to hurt you at all. And it'll be a drop in the bucket as long as you're building wealth with the capital that you have access to through the HELOC. That is it for today, guys. Thank you so much for watching. Drop a comment in the comment section down below and let us know your thoughts as well as your experience. Do you have a HELOC, and how did it, or how is it impacting your credit score? Once again, thank you so much for tuning in, and I will see you next time.